forward. Ladies and gentlemen, we move on now to our next session, essentially looking at how institutions are really gaining exposure in digital assets. I ask you that question, what would you say? I'm sure you would have maybe different perspectives on this right now. We're going to dive into this a little bit further and kind of try to understand this better, helping you make better decisions as well. Ladies and gentlemen, let's now welcome to the stage all our panelists and our moderator as well. Please welcome Stéphanie Cabossioras, Quentin Werle, Teodora Atanasova, and our moderator, Selin Suntay.
Thank you very much for the introduction. I'm very delighted today to have a diverse range of participants in this panel. The topic is how institutions are gaining exposure on digital assets. It's an important topic. It's gaining traction. If you look at the trends, put ourselves 5 years ago, we would have hoped for that adoption, and today we see it with stablecoin, with tokenization, a lot of use cases. So let's first start with Quentin, maybe on the first question. So across your network and clients, how are institutions actually gaining exposure today through exchanges, VC, tokenized assets, and which of these channels are seeing traction?
Thank you, Selin. Good morning, everyone. So maybe a short step back to answer this question. First thing I like to mention, everyone knows that crypto have been adopted first by retail, and now only we start to see some institutional coming in. So we have seen and experienced along the last year the big move of institution toward ETF. We strongly believe that they have adopted this product because it was the only one available for them, because an institution will not open an account with a trading venue and trade directly on a place where trading and settlement is taking place, and where they would put at risk with the exchange their assets. So we have seen a lot of solutions coming in this year. We can name the example of the one with the OKX, where you get safe kept your asset by Standard Chartered, and then you trade on the trading venue. But I also like to touch on the investment fund, because traditional finance players, especially for instance insurance, pension fund, they use mutual fund to do their investment. They don't do it directly. If you go to your life insurance, they are going to offer you a range of investment funds, and today they cannot do it because most of the funds are located offshore, Cayman, BVI, especially when it comes to crypto. So at 6M, we have started to launch a regulated supervised fund, because we are the first one to have obtained an authorization to do so. We hope that other actors are going to take the same trains than us to be in a position to offer investment funds which are regulated, supervised, and that would qualify for a traditional finance player. We estimate that today in Europe there is approximately between 60 and 80 billion invested in crypto assets through investment fund, but most of those funds, as I mentioned, are unregulated. We believe that proposing a regulated structure will attract probably 500 billion in the next 5 years to come. So the trend is significant, and traditional finance players, to answer your question, they need such medium to do their investment because they are not going to do it directly.
Thank you very much. It's actually a very good segue to the next question, because you speak about regulation and how it is important in this industry for institutions to adopt the technology. Stephanie, which institution would you say are taking the lead today? And if they are hesitant, why would that be?
first of all, my company is a good example of institutionals entering the crypto world. I'm the Secretary General of Société Générale Forge. Société Générale Forge is a subsidiary of the bank, Société Générale, and it has been created 5 years ago, at a time where no institutional, or almost no one, were present in the crypto space. Why is it possible for institutionals to enter this new world of crypto? At least in Europe, it's mainly because of regulation. Before the MiCA regulation, before the harmonization of the regulatory framework in Europe, it was very complicated for institutionals, for banks, for investment funds, for other institutionals to enter this new activity. Fortunately, in France, we were quite lucky because we had drafted a regulatory framework in 2019, so we were among the first ones, and that's why maybe it was easier for some institutionals to explore this new way, and it's the case of Société Générale Forge. Why it's possible to develop activities? Because of these new regulations. For example, at Société Générale Forge, we have 3 regulations which allow us to do almost all the range of possible activities on blockchain. The first one we got was the investment firm license, so a MiFID license, to do security tokens, so to issue tokenized financial instruments. And we are the first one to do all the leading pioneering transactions in tokenized assets in France. The second license we have is an investment firm license, is an electronic money institution license to be compliant with MiCA, to be able to issue stablecoins. So we were one of the first to get this EMI license in Europe following the entry into application of MiCA, and we are one of the first issuers of stablecoin, of euro stablecoins in Europe. And we have announced today that we will issue also a dollar stablecoin. And it's because of the regulation, the European regulation, that we are able to do that. And the third license we have is the Virtual Asset Service Provider license, which is a national license, it's the French license, which we are converting to a European one. So back to your question, regulation is absolutely key for institutionals. Without that, they have no risk appetite to enter a crypto asset world because they don't know what activities they can do, they don't know what are the obligations, they don't know how they can do it, and they are very much subject to oversight and supervision of regulators, so the risk for them is absolutely huge. That's why regulation is an enabler.
Thank you very much, Stéphanie. So indeed, to adopt this new technology, financial institution needs to get trust, and in order to get trust, regulation helps, but it's not the only thing. We also look at infrastructure. A financial institution are looking at secure and solid infrastructure rails for the users to be able to have trust in the transaction they are performing. So Teodora, how are, so today, as you see this adoption grow, what infrastructure, so whether it's custodial liquidity data, is still lacking, and what qualifies as basic non-negotiable tooling for an infrastructure?
Thank you so much for this question. This is actually a question I've been wanting to answer for over a few years now because, well, when I was getting prepared for this panel, we discussed with our peers, should I do a joke, should I not do a joke? But this entire thing has been such a joke actually for the past couple of years. So I might as well just tell you the story because I'm coming from a crypto-native company. I'm not coming from a big institution or something. Nexo is a company that essentially started as a digital asset manager. And back in 2019, for example, when we went to Wall Street for the first time, and we started knocking on the doors of the biggest banks, and we were asking, but what about digital assets? When are you going to implement them in your structure? When are you going to start working with them? And I remember no emails answered, nothing, absolutely nothing came back from them, and we left very disappointed, to be honest. And fast forward to 2021, for example, they came to our offices, they valued the company at 15 billion, et cetera, but this came with time, and this is the joke actually, that a couple of years ago we were trying so hard to push institutions to actually get in touch with, like, finally jump on the train with digital assets. So I'm very happy that we're having this conversation today, finally. But I totally do understand why they were dragging their feet and why they were so reluctant on jumping on the train, because we also what happened in 2022. For example, we weren't ready for this. We needed regulation, we needed robust infrastructure, we needed military-grade security, and these are the table stakes for a digital asset platform like ours to be able to work with big institutions. And at Nexo, we boasted having, well, the table stakes certificates, indeed, the ISO 27001, the SOC2, for example, which are the absolute must. And if in the crypto world of yesterday, this wasn't so important, or at the DeFi stage, right now, to have big institutions actually coming into this market, we need this. And we've been very happy to offer this for a few years. This is why we're so sought after from the big institutions and banks that work with us, because basically we get to onboard them very fast with our corporate accounts, and we just provide them with all of our built-in products. Another product that we're very happily working with large institutions is our white label solution, which offers ecosystem builders to directly build on our platform and just enjoy the lending, borrowing, you name it, exchange, everything. So these are a couple of things that have led us to onboarding so many corporate clients and so many large institutions, and what has led us to essentially having a little less than 9 million clients and 11 billion assets under management. And one of the other things that we're really happy with is our crypto payment gateway, which provides, well, basically every single merchant that wants to have direct access to crypto without going through the whole regulatory nightmare on their behalf. We've done it already, so basically they just implement it as a way to do payments on their actual platform. And this is also something that gets a lot of the institutional hurdle out of the way. It just makes it simple, easy, and this is the way to make the smooth transition from institutions to digital assets managers like ourselves. But this comes with a lot of work, a lot of innovation, and as my fellow panelists said, a lot of regulation, because before that it was the Wild West over there, and we all know it, so.
Thank you very much. So indeed, the way the products are built is also very much important. However, we hear about crypto, blockchain, but we see different type of use cases. And as adoption grows, it's interesting to also see which kind of use cases are being adopted by institutions. So it's an open question to anyone that wants to answer. What are the type of use case that you see having traction with banks? And do you see difference on those use cases depending on the market the financial institution is operating in?
I can start. So on our side, being an alternative investment fund manager, the use case we see is obviously linked to investment fund. We have different type of clients. We have people coming which are crypto native, so people who already have managed accounts or SMAs, this kind of product, and they come to us to become more regulated, to obtain a more important potential investor basis, Because if you would like to attract an institution in your investor, you need to have a regulated structure, or at least the institution asks for it, or when you are going to pass due diligence, you need to do that. On the other side, we also have people coming from TradFi, which are institutions who already serve various asset classes, and they would like to add crypto on top of what they are servicing. Those actors, those funds that come, promoters who comes to us, they would like to replicate what they are doing. Generally, they are not inventing something new, but they would like to answer to their investor basis on saying, yes, we have something in crypto, yes, we can do something for you and provide you this product. So that would say the two types of adoptions that we see.
In terms of use cases, but it depends on the product as well. For example, we have chosen to develop a tokenized money product, so a stablecoin. Why? Because it's at the center of all the use cases that are emerging with tokenized finance. You need to have on-chain cash to do settlement of security tokens or security of tokenized asset. You need to have on-chain money to do crypto trading. You need to have on-chain money to do tokenized payments. So this on-chain cash is at the center of all the use cases about finance on blockchain. That's why we chose to develop this stablecoin. And then with one asset, you have a large range of use cases. For example, our first customers for the Euro CV, the Euro stablecoin, the Euro convertible, it's crypto trading. So our clients are crypto institutionals, crypto exchanges like Bitstamp, crypto brokers like Bitpanda, crypto market makers like Wintermute, etc. So it's the first use case. But with the same asset, you can have other use cases. In payments, we have announced recently that we are partnering with BCB Market, which is a major payment infrastructure, and other payment service providers have already announced to be integrated the Euro CV for their clients. One bank, Signum Bank, it's a Swiss bank, has announced to have integrated the Euro CV for all their partners, including their banking partners. So it's possible to pay in the Société Générale for stablecoin with Signum. So with the same asset, you have also all the range of payment use cases. And there is another use case for stablecoins, which is not really mature yet, but which has a strong potential, is the settlement of tokenized financial instrument, settlement of security tokens. Because there is a whole development of tokenized capital markets. It was being discussed in the other stage. Potentially, you have the possibility to tokenize all markets and to have access to liquidity all around the world. And to do that, you need to have a settlement asset, money on-chain. So either private money like stable coins, either CBDCs, which is like more the central bank money. So you see, the variability for the broad range of possibilities for one asset is really large, and that's why we have chosen to develop this asset so far.
Thank you very much for your input. This will be the last and conclusion question, I would say, and it's a bit covering the aspect on what kind of shift would you see in the industry from institution to pass from passive involvement to active involvement. And of course, we have mentioned regulation, we have mentioned infrastructure, but we still see only a few players today adopting and excelling in those topics, while others could and have the resource, but don't. And what kind of signal would you send them?
I can start. It's like in every technological progress. So it's moving anyway, because this technology is a way to process transactions, financial transactions, in a more efficient way, quicker, with less cost, etc. So it's a way like evolve or die. it will happen anyway. It will happen slower in finance rather than in tech, because finance is regulated. So it won't be as simple as in tech or in telecommunication industry to disrupt this industry. But however, if this technology enables faster transaction, access to worldwide liquidity. Also, it's another thing we discussed on the other panel. Basically, blockchain and tokenized infrastructures, payment infrastructures, capital market infrastructures, it's a way to have access directly to global liquidity with less boundaries, less fragmentation, etc. So it's a strong opportunity for Europe as well, because in the last 10, 20 years, there have been many discussions about the integration of European capital markets. There is also an initiative of the European Commission, the Capital Markets Union, you may know it, which has not really succeeded. So this technology, the blockchain technology, is a way to do a technological leap to have more integration at European level with natively European market infrastructures, but also at the global level. So all of this is happening, and voilà, the thing for traditional financial institutions, other institutions, is to keep the pace, to be sure that they are still leaders in the world of tomorrow. They are not blind, honestly, they are seeing what's happening. A lot of financial institutions have tested a blockchain, mainly with tokenized assets, so tokenized bond issuances. A lot of European banks have already done that. And in fact, in Europe, we are leaders in the world in terms of volumes and numbers of tokenized bond issuance. But voilà, now we need to evolve to other assets. And for me, one really important asset of the world of tomorrow is stablecoin, is on-chain cash. For many reasons, for economical reasons, for financial reasons, for sovereignty reasons. So that's why it's a big priority. And I understand there are many discussions currently, including in public authorities, to discuss this topic.
So to complement that, I can maybe add on the buy side, so on the investment side of the institution. We launched recently an investment fund, which is supervised, investing 100% in crypto. And now that we enter an investment committee more and more to defend our case, or at least this product, the conversation we have is much more, let's say, smart on crypto, because now the question we get are more towards the risk that is bearing with the investment they are doing. Before it was more about a misconception about this asset class. You use the word Far West. We also heard it in some investment committee. But today, those institutions, they really look at managing their risk. It was a reputation risk to invest in crypto. Now, if you don't invest or don't have any initiative, it starts also to be a reputation risk because you have not done anything on a new technology. So institutions are starting to enter the space, but it's very, very slow. I concur with what you just said earlier. When an entity like to invest in crypto, like a bank or something like that, they have approximately 20 committees to pass on for a new asset class. So it takes at least a year, if it's not two, to make it work. They have started in 2021, you say it, in the last bull run. They have stopped in 2022. They have restarted when BlackRock launched their ETF. And right now, some committees are taking place, investment committee, which are deciding to invest in the space, but it's very, very slow.
Thank you. Yeah, it's exactly as Quentin and Stephanie had just described it. Basically, we've been waiting for this to happen for a long time. Then it stopped at 2022, and then it's restarted again. Actually, the last rally we witnessed is basically institutionally driven. So It signals top-tier institutional comfort, and I think that the passive involvement of the institutions, those days are over. They're coming in right now, they're trying to get themselves familiarized with the space. And honestly, this is not a simple task, because we've been waiting for a lot of regulation for a long time. And again, this is why so many large financial institutions come to us, for example, like Goldman Sachs in 2021, JP Morgan, et cetera, because they need know-how that comes from, it's something that only crypto companies can give. This is one of the reasons why we have so many corporate accounts as well, as I have already mentioned. One of the reasons why we started implementing our white label solution, which is basically a 360 service crypto exchange, stable coins, as Stephanie mentioned, borrowing, lending, all of this built-in service that you don't have to build yourself. Like, this is something that you don't have to go through yourself, so it just makes life easier. One thing that I might point out to as well is account management. We have a white glove service, which is, well, it's a top-notch service for institutions as well, because corporates and big institutions, that they like to do things smoothly, instantly, yeah. And I think that large financial institutions are slowly coming on board, and slowly but surely. And yeah, if they want to be future-proof, this is the way.
Thank you very much. Thank you for your participation. If there are any questions in the room that you would like to ask, please feel free to do so. If not, I will let... Oh, sorry.
Any questions at all? If you have a question, just put up your hand. I'll give you the microphone.
Good morning, and thank you for the presentation and for the panel. The question is double-sided. Yesterday, Mr. Atkins referred to a kind of free zone or zone franche with regards to DeFi in the States. And in Europe, I feel like regulation is going to step more on these types of innovations. So how would you recommend, I guess, the next steps to be taken? And secondly, this is more for Stephanie, I think. The dollar is losing value faster than Bitcoin in terms of fluctuation since the beginning of the year. So would you still recommend stable coins based on USD? Or since you're working with Signum Bank, maybe this initiative to peg a stable coin to CHF franc might be a good idea to kind of pair off with inflation and fluctuation?
I can start with the first part of the question and DeFi and how to co-op in Europe with this thematic. So, as you stated, it's true that Europe wants to regulate DeFi as well. They are launching a set of update of MiCA, which will include probably a piece on DeFi. On our side today, because we have some demand, obviously, of some asset manager, fund promoter, to try to wrap in our regulated fund some investment in DeFi. The only way we can successfully do it right now is using dedicated vault, and vault which include only whitelisted participants, because we need to make sure that the money you are going to put in a pool is not going to be tainted by someone else who is not, let's say, clean. So it brings a lot of limitation, because obviously the best reward are not on those pools, strangely, but maybe for good reason. So we try to find active solution around that. We are still doing some test case to make it work, but we strongly believe in the use case. And you know, actors like Big Bang, JP Morgan, and so on, they will start to use that when they will be certain that everyone around the table is legit. and whitelisted. And for people which are coming from crypto, it's tough because you're used to a free space, free world, and privacy. But if you would like to play with those big institutions, at some point we need to find solution to make sure that all actors around your liquidity pool is known and whitelisted.
Yeah, I agree. DeFi has a very strong potential in terms of automation of financial transactions. So it's very interesting what's being designed currently on DeFi. For institutionals, it's very complicated to interact with DeFi because even if in MiCA there is a legal carve-out, so DeFi is excluded for MiCA, no need for authorization to provide crypto asset services. However, for AML purposes, anti-money laundering, there's no legal certainty on the rules that apply to DeFi, and most certainly, they apply. So that's why the use of permissioned pools and this legal uncertainty which prevents institutionals from interacting with DeFi, which is a big problem because all the input, the efficiency that can be gained from DeFi will have difficulty to infuse in the rest of TradFi. For your questions on stablecoins, of course, there is a use case for every currency in the world, of course. It depends mostly on the use cases. Currently, in crypto trading, US dollar is really predominant. We also, as Société Générale Forge, we are a European player, so we strongly believe that there is a growing potential for Euro stablecoins, because currently they are a very small part of the market, but there is no reason that in the medium term the Euro stablecoins are not used very much widely in Europe and even elsewhere as well. Currently, Euro is, in terms of foreign exchange reserve, is 20% of worldwide foreign exchange reserve, so there is plenty of room to grow.
Okay, any other questions? A little bit more time.
Thank you very much for the panel. My question ties to the infrastructure side of things. You spoke about how institutions, they tend to prefer the easy route, custody, and that's understandable, right? I can imagine most institutions preferring a service that is, gives them the peace of mind. But then there's a question about DeFi, and this whitelisted at least in Europe, payments, and the other opportunities that the blockchain rails offer. My question is there an appetite in your perspective from institutions to use more hands-on self-custody rails infrastructure, such as multi-sigs, just in general, self-custody? Is that a thing that they have access to and want to have access to?
So, just to make sure I understand the question properly, so it's regarding the access of institution to a custodian solution, self-custody. Today, that's probably one of the things institutions do not want to deal with, because when you do some self-custody, you can structure it in a way where you have various rights, various users that can approve and transact. But if you're an asset manager, and I was discussing with one of them just before the panel, they don't want to take the risk of the custody. They would like to shift the responsibility to a custodian, like they do for other assets. If you take the example of equities which are traded, they are generally, if you're in New York and you trade on US stock, they are generally safekept by BNY only, and you are only the settlement is taking place once a day, and that's it. And they would like to achieve the same thing. So the setup we put in place for them is really close to that. We're using off-exchange settlement and custodian which are outside. For some specific protocol, ICOs and stuff like that, sometimes we can have a bit of self-custody, but it's really not what institutions are looking at. At least it's not the client we are facing.
Ladies and gentlemen, I think that's it. Ladies and gentlemen, hands together for all our panelists and our moderators as well. Thank you so much. Fantastic.